Good morning to all traders and welcome to this week's first Market Insights video on the indices. We're going to look at the DAX, Germany's 30, the FTSE 100 UK's, the S&P 500 in the US, as well as the US index. Now, over the weekend, we've had some bad news coming in. As we expected last week, the recovery fund in the European Union was not agreed. We still get pressure from Frugal 4 because they do not want any grants. I mean, they didn't want any grants approved. Now they have caved in, it seems like, but there is a debate. There's still disagreement about the amount of the grants. The hardest hit countries go for 450 billion euros. The Frugal 4 push really for 350 billion euros. Now Germany, France, and Italy, if not mistaken, they really want to push for a median to find agreement at 400 billion euros. Now, the offer is on table. However, there is still debate, and this debate is raising concerns of how the pandemic is going to affect the European Union countries going forward. Now, in the US as well, we've had issues because there needs to be funding for faster testing, okay, for coronavirus, because the cases are rising and the laboratories really struggle to keep up with the increase in demand. There is pressure on Mr. Trump to up his game on the coronavirus testing funding. Until we hear news on those, I think we're gonna see, at least for the beginning of the week now, the markets being affected by both the US and EU headlines. Now, when I go ahead and start with the Germany's DAX, if we look at the current structure of the market from the bottom of the 8,000 or so, we are moving in the A, B, and a C cycle degree move, by the way, right? So we are currently in wave B. Wave B seems that it has another wave to go up, okay? And why is that? Well, because we need to break above the previous high of 1294. Since this is considered to be wave 3 of the impulsive correction, let's just say, right? So we've got 1, 2, 3, 4, and 5 over here with wave A done, wave B done over here, and here we've got 1, 2, 3, 4, and this looks like to me it's going to be a very nice ending diagonal. Now, 1, 2, 3, 4, and 5 is not done. You may ask why not done here? Well, it's simply because we didn't have a fresh high, okay? So I think we're going to need that. We're going to need new high, and that is near the 1317 or so, because this is the 88.6 Fibonacci extension of wave A, and then start looking for prices to move lower. Now we get a hint on the RSI, but I believe most likely we're going to get another one with an opposing signal over here, same directional bias, of course, right? So it could be, well, prices moving up and they're low, and then, you know, just falling, breaking below this level will probably be one of the first few signs to start considering sells. Let's just go on the UK's index. Well, I see this move as an A, B, and a C in the longer term. So I see this as a W, X, and Y. Is, first of all, we need to complete this triangle pattern. This looks like a triangle to me. We've got waves A, B, C, D, and it looks like we're going to get another move to the downside for wave E. This is going to complete wave X of W, X of B, let's just say, and then we're going to see another move to the upside to take out wave Y. Okay, once B is done, we're looking for prices to move lower below the 47.57. Now, since we've done the 50 Fibonacci retracement of wave A, right, I'm looking at the 61.8 next for wave B, okay? This is around the 67.12 or so. Now, don't think that we're gonna only go up to that level. We could literally move higher, okay, to the 61.8 Fibonacci extension of waves W and X. That's gonna be around the 7,000 mark, which is also a round psychological resistance as well. So I wouldn't be surprised if the upside is a bit deeper. However, what I'll be looking at closely, obviously, is to get some bearish signals from the RSI first before start moving, taking any short positions. And I will be looking also at the trend line break as well. Okay, on the S&P, well, we talked about this move, right? We've been talking about this move for a while. Now, with this move to the upside, sort of looking like a false break also above the previous one, I start thinking that this might be an expanded triangle, an expanded zigzag, excuse me. So WX and Y up here for wave X, because we had WX, a W wave down here. And we are looking to complete wave B a little bit higher, perhaps revisit the trend line, okay, connecting waves B and A over here, B and C, and then start moving lower. That will be wave C, then W, X, and Y to complete the cycle move to the downside. Now, in case, of course, we break above the 3305, which is the second wave of the extent of the expanded move, we could literally go to 3350 level, up to that level. If we break higher, then this is an impulse move to the upside, and we're going for fresh highs above the all-time highs of 3400s. US index, well, since we are still moving lower and correctively, I look at this now. I've changed my view on the corrective pattern, and we went from a ABC to a W, X, and Y. And this is because we keep getting corrective patterns. And that said, this is a corrective pattern, it's not an impulse. And this is also, it can be a very nice ending triangle. So I believe that we're going to get another move to the downside without breaking below the 95.70, which is the previous wave one low. And then move higher. This is going to be anywhere between the 98.50 and 99.34 or so, which is the 38 and 50 Fibonacci's, or even higher. However, for the time being, and since I get this validation on the RSI over here, okay, I'm looking for a short-term bearish move for the US index. However, not below the 95.72. If that's the case, most likely we're looking for this to be wave 1, wave 2, wave 3, wave 4, and we're going to get a wave 5. This is going to be wave 1. So thank you for watching, and I'll speak to you again tomorrow.